Okay, welcome back, girls. Today we're going to move on to higher level tabular statements, and we'll start with just the 60 mark tabular statements for the higher level. The question we're going to start with is the 2004 higher level question 2. I've just done out the grid and done the first two columns as well, and there's a few things to note about it. Firstly, I think I mentioned already, these are not over the time span of 1 month. They're months during a year. Now, it's still only one transaction per month. You know, something happened in January, something happened in February, but it's just a slight difference to the ordinary level. The next thing to note is, and then we'll just look at the information they give us in the question. In the fixed assets, for a start, they give us cost, depreciation, and net book value. And really, to make everything balance, all we need to use is the net book value. But just to make our tabular statement more accurate, instead of just putting in the net book values, we put in the cost and the depreciation. So we put in the cost in the assets section as a plus and the depreciation as a minus, so that essentially when we add all of these things up, it'll be the same thing as putting in the net book value. Okay, so as we can see there, 460 plus depreciation on land and buildings is 13,800, so we put in the 13,800 here as a minus. So land and buildings, depreciation on land and buildings, or I've said for short here, accumulated depreciation. Vans, the accumulated depreciation on vans. Stock, debtors, insurance prepaid. So we'll see there the current assets. Stock, insurance prepaid, debtors. Okay, excuse me. And then we move on down after that. And down at the bottom, I suppose it's we can see there's slightly more of the liabilities. So you have creditors, bank, wages due. Then you have, even though it shows authorised and issued share capital, all you want really is the issued share capital to put in, the share premium, and profit and loss balance. Okay, so over here you might notice I've done something a little different. I put in the share capital, share premium, profit and loss, creditors, wages due, but what I've left out is this bank figure here. And the reason for that is that you are allowed at higher level, I think in every single question I've ever come across, the bank is always in the liabilities section. It's an overdraft, but you are allowed to choose yourself to either put it up with the assets or down with the liabilities. Now, it is in the question in the balance sheet that they give you, it is a liability because it is an overdraft, but you can put it up here if you like, bank, and put it in as a minus figure, and then when you tally this and tally down here, then it'll all add up fine for you. Now you'll see, I think for the most part, when you look at the solutions online, you'll see that they usually, if it is a liability, it's down here in the liabilities. The reason people like to put it up here is just it's easier to think about. So for instance, if it's up here, your bank, you started off as a minus since you owe money to the bank. Okay, but then every time you get money in, you put it in as a plus. Every time money goes out of your bank account, you put it in as a minus, as you would expect. But the thing is, if you put it down here, then every time you got money in, you'd have to put it in as a minus because you're reducing your overdraft. And every time you paid money out, you'd have to put it in as a plus. And sometimes because you have to think like that, people get mixed up and they find it easier to put the bank up here. So for today, I'm going to put the bank up here. Bank. And how much was it? 10,100. And because it's an overdraft, or it's a liability, I'm going to put it in as a minus 10,100 in the bank. Okay, next thing, because I've done this earlier, I'm just going to total that. It's 602,100, and down here 602,100. Okay, so you are going to, if you put the bank up here and in the solution they have the bank down here, you're going to get different totals. I mean, they'll have, their totals are going to be the same above and below, but different to the ones that you have. Yours should still be the same above and below, put two different ones to the two that they have in their solution. And the same goes, some of these, when you're doing these throughout, because some of your bank information will be in here, whereas they'll be putting in bank entries down here, some of the totals are going to be different for you and them. Okay, and your total at the very end, when you're totaling the totals, if you like, is going to be different as well. Okay, so don't worry about that. It is allowed. You can put the bank. It's the only one, I should say as well, that you're allowed to put it in either place. Don't go doing it with any of the other assets or liabilities. Okay, enough talk then. Let's move on. So KC Limited is the first one in January, decided to revalue the land and buildings at 580,000, which now includes land valued at 100,000. Now, just to speed things along, I'll tell you that that bit doesn't really matter until later on. That's really just to help you when you're calculating depreciation later on. So we can ignore the 100,000 bit. Casey decided to revalue land and buildings at 580. Well, the first thing that happens when, or one of the things that happens when you revalue land and buildings, is you set your depreciation back to zero. So our depreciation was a minus 13,800. To set that back to zero, we have to put in a plus 13,800. That means when we add this across now, that would be zero at the very end. Plus and minus would cancel each other out. Okay, our land and buildings, it said, were revalued at 580,000. So we don't, be careful, we don't put 580 in here. What we do is we just put in enough so that when we add across, it will now add up to 580. So 460 from 580 is 120. We need to put 120 in here to increase our buildings up to 580. So when we add these across, I'll have 580 at the end. Okay. And that's it for the top, 120, and this is 133,800. Okay, and against that, oh, and I should have said earlier, sorry, leave a few blank spaces in both places. It's always a good idea in case throughout the question you need to introduce new items, because even in this very first one in January, you do need to introduce a new item, and I'm sure you can guess it already, but anytime you revalue land and buildings, something else goes into your balance sheet in the finance buy section. It's the reval reserve, I'm going to say, for short, reval res. Okay. And it's going to be the full amount, the 133,800. 133,800, and everything balances nicely. Okay, next one then. It's on the 1st of the 2nd, 2003, KC Limited bought an adjoining business which included buildings, delivery vans, stock, creditors. The purchase price was discharged by granting the seller 400,000 shares in KC Limited at a premium of 20 pence per share. Okay, so the first thing to note is they bought a new business, and when they bought the business, it included the buildings that the business owned, delivery vans, the stock. They got all these things. Now, unfortunately, in the agreement to buy the business, they also said, look, all right, we'll pay off your creditors. They had a debt of 33,000. Say, fine, give those creditors to us also, we'll pay them off. So it's like you got a plus, but you got this minus as part of the deal as well, because you have to end up paying these creditors on behalf of the business that you bought. Okay, so let's just put in those things first of all. If you got buildings worth 360, then another 360 goes in up here. You got delivery vans costing 58,000, or net book value 58,000. Since they don't give us depreciation information, we have to put it in here just. Okay, you got stock for 25,000, so stock 25,000. Okay, you got creditors 33,000, so down here your creditors have to go up by 33,000. Okay, and the purchase price was discharged by granting the seller shares in KC Limited. So instead of giving them money for their business, we said, look, we'll pay you in shares, in valuable shares in our business. So they granted the seller 400,000 shares at a premium of 20 pence, or 20p per share. Now, we've seen this premium idea when we did it was cash flow statements in fourth year, but just the idea is again that 400,000 shares. The shares have a nominal value, the ordinary shares, of €1 each. Okay, that's what they cost maybe originally when you had the initial public offering, when you first opened the business and sold shares. But now, because you've been trading and you've been doing well for many years now, they cost more. And so the value of the shares has gone up. So 400,000 shares, instead of being worth €1 each, so 400,000 euros, they're at a premium of 20 pence per share. Now, 20 pence per share is the same as 20%, isn't it, if the shares were originally £1 or €1. So they've gone up in value by 20%. Okay, so if we got 20% of 400,000, that's 80,000. Okay, that means we gave them shares that were worth 480,000. That's what we gave them for their business. So we've got to put that in here first of all as well. Our share capital went up by 400,000 and our share premium 80,000. Now there's something else to be worked out here though. One second.